All right, Mike Eppel in with his half-hourly look at business. Mike, I will tell you right now, everything seems to be coming up roses for Canada lately. With, we've got the latest economic forecast looking better for this year. We've had so much chatter about maybe a brain drain finally from south of the border to north of the border. How much can we bank on this positive outlook, do you think?
The so-called reverse brain drain. Yeah, Kevin, indeed. We're looking at some economic statistics in from one of the global policy think tanks this morning. It's the Organization for Economic Cooperation and Development. And they're raising their expectations on the Canadian economy this year to grow at about a 2.5% clip, which would be one of the best performances, economically speaking, that we've seen for the Canadian economy over the past several years. The question, though, is what is the underpinning for the economic growth? Is it business investment? Not necessarily, and that's really what we need to see to get things going. The Bank of Canada has talked about this recently, where businesses aren't putting as much money into their companies as we'd like them to do. They're saying, look, you've got still high tax rates, high hydro costs, the imbalance between what's maybe happening in the United States, the valuation on the currency, all of these things leading to a still hesitant business community. At the same time, though, consumers are still spending. You've got a strong real estate market and other factors, a positive vibe for the Canadian economy, the Canadian experience, so to speak, what with the effects of potentially the Trump administration in the States moving more of a spotlight on Canada. So again, some positive signals. We don't want to get ahead of ourselves, and certainly the Bank of Canada has said they're not looking to raise interest rates anytime soon. You hope that there are actually jobs for people to come into this country to find and, again, get the economy growing. That would be good for the Canadian dollar, which has been struggling a little bit recently. This morning we're coming in with the loonie languishing close to an 8-week low. And this, again, is on the prospects that the United States is looking at an interest rate hike this month, potentially. And again, the Bank of Canada not doing anything with our interest rate policy here. Why are Chinese buyers looking at the Toronto housing market? Some data in from Sotheby's International looking at the effects of that BC foreign buyers tax implemented last summer, which cooled off the Vancouver housing market. It led to a spike in searches for real estate across Canada outside of BC and Toronto specifically, but Sotheby's saying that it hasn't really translated into a lot of foreign buying in the GTA, at least not yet. And why are Chinese buyers specifically looking at Canada? For our education system and quality of life, not necessarily for investment purposes. And that, again, is a positive signal on the real estate market overall. Kevin, back to you.